Hello. So it's been a while, nearly a month since the last video. Welcome back to Elliott with some crypto. So we're gonna have a quick look on BTC and FTM. The Quora Inner Cycle team is vote is in, and this is what we're gonna be analyzing today. It's been a month actually, because for some personal reasons, doesn't matter. Nothing much happened. Actually, we have seen markets moving accordingly. We have been going up since the last video. So the moves that we have seen actually just like short-term variations of a 5-wave leg to the upside. So we're going to explore, of course, the all sort of long, medium, and short-term time frames today. I'm going to start with the BLX Brave New Coin Index to show you a better sort of longer-term perspective and what I'm expecting prices to do going forward. Some statistical intricacies, I would say, that they are important to revisit as we move up and everybody is calling for the bottom to be in, which might be the case, but well, statistically speaking, right now is not looking like much that is the case, at least. But there is more upside indeed left, and we're going to be giving you some targets, of course, in this video. None of this is provided as an investment advice. Let's not forget, it's purely educational to give you an idea of what you can expect based on Elliott wave analysis. If you also have your own analysis, you would like to comment on YouTube or join the Discord channel where you can post your Elliott waves and get some sort of comments back in return, some feedback, feel free to do so. The link for the Discord group, it's in the caption. So let's jump to BTC first and then FTM. So here we're again, and the BLX, it's in front of you. My long-term count is for supercycle wave 3 that has finished here, and we're going to see an ABC correction. Probably going to go, I mean, the maximum I see going down, actually, it's this sort of high activity level around the 7K. We still have a lot of upside, though, left to be done. We are facing some sort of resistance here now, because as you can see, this is a base channel that I draw connecting 0, 2 and 1, and actually we have returned back within this base trend right now. And if we don't go back above like the 30K, or even I would probably say the other single at 35K, then the chances of seeing further downside, of course, are going to increase. Now, if we are indeed looking at a correction here, that means that we haven't finished wave A, in my opinion, yet. Actually, maybe we have, but we're going to get a correction, then further continuation to the upside. We're going to see where that wave goes, how far it goes, to really assess whether the low is in or not. But statistically speaking, because this is also a 5-wave look to 5-wave move to the downside, it's more likely that we see a correction. Why, you might ask? Well, because 5-wave legs can belong only to a flat wave C and to an impulse, okay, either A or 1. So in our case, A, B, and C. If it's going to be a flat, then that means that this is wave 1 and 2, this is wave 3, and this is going to be an ABC for 4. But flats, when they come in wave 4, they don't tend to be as deep when wave 2 is also that deep, because wave 2 is very deep as well. The guideline of alternation says that when wave 2 is shallow, wave 4 is deep. When wave 2 is deep, wave 4 is shallow. We see a W, X, and Y here on ABC terms, and actually a flat over here, which actually matches more that correction over here when we look at magnitude and amplitude. The other thing I wanted to just note, I have actually marked the halving dates here on the thing. It's on a 5-day, that's why it doesn't show the dates completely accurately, but it doesn't matter. It's a rough estimate. You see from the previous low, the first halving happened 370 days before the halving date. Now onto the next halving, it happened 545 days. That is like 1.5 times before the first time. Then The third one came in 515 days, which is very close to the one before. Now, if we are going to make an assumption here, of course, you've got 375, 545, and 515 to play with. So what are you going to do? You can create an average of those and assume that you've got anywhere around 450 sort of days for that. And this actually plays out fairly well because the low coming in now, and based on the next halving in March, it's around 475 days. That the low in, right? But then, you know, we are looking at cycles here, and you know, when we're looking at a correction of a super cycle degree, of course, that's supposed to create a bit more of a dip, and cyclical relationships also break down. Now we have had, for example, you know, 375 here and 545, 515. These two match, but this one no. I mean, it's way not correct, you know. But you could say, well, 375 and then we are around the 500. Yeah, that is also possible. But, you know, we've had a decrease from 545 to 515. Maybe the next one is going to be around 500 or 590 or so. That is also correct. But I just wanted to also show you something else. Look at this. From the previous low over here and the previous half, we went all the way up here. We did probably like 90% of that leg. And we came all the way another 90% down off that leg again. Then now on after 450 days. So who tells you that, you know, that is not going to be the case over here? That could also be the case, okay? So there is still high chance that we might just go all the way up here, right? And then like a few days, like maybe a couple of months before the low is in, the thing is coming, we're going to go back to like 17K. You might say, well, still, we're not going to see a new low, are we? Well, we might not still see a new low, but that is based on the statistical sort of relationships between the corrections pre-halving, okay? There is nothing guaranteed. History sometimes rhymes, yes, but you know, it's not necessarily we do so. It's actually a bit against of our main, and the main is this because we have a clear 5-wave leg to the downside, okay, guys? So as for the reasons I explained. So I do actually think that we're gonna break that relationship this time around, okay? For now, I am not gonna change my main because there is no evidence that this is going to be an actual low in. There is no evidence, okay? And just want to mention something as well. The fact that they're low, I don't think the low is in, doesn't necessarily mean that cannot be traded, right? That's an ABC and should still be traded as a 1, 2, and 3, of course, with a smaller target for wave 3, okay? That is not what it means. It's just we are talking about two completely different things, like getting into that low because the low is in or because there is a trade. It's pretty much the same thing, you know what I mean? But now debating on whether the low is in or not is a complete different thing. Anyway, I hope you understand what I'm getting at. Now, we are gonna start with well, the main is here, right? So we're looking for this as a 5-wave leg to the downside, right? If we look at it a little bit closer here, and you got 1, 2, and 3, and 4, and there is of course now a case here where the 5th wave is finished or it's not. If it's not finished, there is two things that can happen. This is 1, 2, 3, 4. It's going to finish with the new high, and that's going to be like coming down in wave B immediately after that, and then we're going to go up in wave B, and then of course we see the big leg to the downside. Or there is also potential for this to turn into an extended 5th wave, okay? So we're gonna get that to be the one indeed, then we see just a correction rather than a reversal, and then we get 3, 4, and 5, right? And that's gonna give us then B and then C. Now this of course has way much more bullish implications because a higher wave E means a higher wave B, which means a higher wave C. So we should be looking for like maybe even up to the 50K in case that continues up in wave A. But we can clearly see that this is an impulse to the upside, right? And we're in the 5th wave, so one way or another, a correction should be due fairly soon. Now, depending on the depth of wave B, we can make assessments for more accurate assessments for where wave C can end, okay? This is kind of the main scenario. Now, let me just take you to some of the variations. One of the variations, guys, is that the wave actually A finished down here, and we are looking at a flat in wave B. So you got 1, 2, 3, 4, and 5. A, B, 1, 2, 3, 4, and then the 5. And the fifth, obviously, here is the same case as I explained before. It can extend, it might have finished already, or maybe we're going to see one more spike to the upside, take out the late shorters, and then that means we're going down, though, right? And again, we're going to assess when we fall down here. If we lose wave 1, then chances, of course, for further downside are going to increase, and that's always the case. The double zigzag is another case. However, we're looking still at pretty much a similar count over here in wave X instead of wave B. So that would be like still an actual flat pattern here, right? So, of course, that is the first idea. I mean, someone might explore the idea of getting an open triangle here or something else, but we're not there yet. Let's just not start getting things complicated too early. The other one is that a double zigzag has actually finished down here, and this is indeed the low in. Okay, for the low to be in, that means that this is a W exit Y, guys. Okay, I don't think this is a flat wave C if the low is in, because it doesn't match with its preceding wave 2 correction. It doesn't. It's not impossible, but it's not as much probable. Okay, now at the same time, if this is a W, X, and Y, maybe we're going to get an extended fifth in the supercycle degree. So maybe supercycle degree 3 is not done yet. Maybe it was here and this is like that. And we're going to go actually see what I'm saying is that instead of having that as a fifth wave, that would be wave 1, all of it. And then you get the 2, and then we'll go up for 3, 4, and 5. And that will give us an extended wave. Yeah. And then something else for those finding the main scenario as 1, 2, 3, 4, and 5 a little bit awkward. And, you know, I might as well just make that change. I mean, it doesn't matter to me. It's still the same thing. The expectation is still the same. This is where this is an actual triangle, and we'll have a 5-wave leg to the downside. That takes the awkwardness of 1 and 2 out completely, and it is a valid triangle case because we have a triangle within a triangle that explains this sort of small spikes to the downside that could be giving us a rule sort of invalidation, if that makes sense, right? So that actually can make that count very valid now. Now, I want to jump to the short term quickly, and I'm going to go down in the 1 hour for this. And here's the short term. And I will tell you something, okay? Because I've seen a lot of people calling this the bottom, but the bottom, unfortunately, cannot be there. Now, you got the 1 and you got the 2. And then internally, you got 1, 2, 3, and 4, and 5, right? And then we'll have an actual flat coming down here. Maybe that shouldn't need that any longer. Yeah, the flat coming down. This is our base channel. We can also draw the like acceleration channel if you wish. That is connecting the 1 and 3, and then we go down to 2. Maybe it's going to give us some sort of level here. Well, there you go. This is where we stopped now. But let me explain something. I'm going to go a bit closer now. Okay, so the assumption is that wave 5 is finished because we have a 5-wave move to the downside. But the way we're coming down like this, okay, it reminds an actual, like, because we came quite deep into that territory and we did the 90%, it resembles an actual flat, right? So it's like a wave B of a flat. But before we get to this, actually, yeah, I think I'm jumping the bandwagon here quite soon. Let me just explain something here. The low, guys, it's at 2160 because I've seen many people calling the low at 2133 because this is the last low price action has gone to. But if you know the rules for ending diagonals, because the assumption here is that this is an actual way diagonal, you will notice that this being 1 and 2, 3 is bigger, which is, you know, only a case of an open diagonal. But then if you look at the waves, actually the second wave, if it lets me do it, look, the 5th wave has also got to be bigger than the 5 wave, the 5th wave has to be bigger than 3, but it's not, it's shorter. So this cannot be a diagonal. Okay, so you would say maybe this is 1 and 2, and then 3, and then where's your 4? You know, there is no 4. It violates the rules. Okay, or maybe you will say, well, what if this is 1 and 2? Look, and this is 3, and this is 4, and this is 5. It just doesn't make sense again. So we're gonna go, and I went back to the drawing board for this because we need to find a solution that respects the rules, guys. And here's the solution. Look at this. You have an A, a B, and we're looking for a 5-wave leg to the downside. 1, 2. My wave 3 is here, right? My wave 4, it's a flat with a wave A as a flat. A WX and Y in B for a regular wave, and a wave C for a running flat in a wave 4. And then you might ask, what about the 5th? Well, the 5th wave, it's coming down here. Let me remind you guys, when we have irregular waves, we don't need to go back to the irregular wave low or high in order to assume the low or the high is in. Look at this. What matters over here is that we are below that leg. Do you understand? Because it's where our flat pattern starts. This is where the flat pattern starts. This is wave 3. So if this is my wave 3 at 2164, what I need to do is go below wave 3 to complete the low. And as you well see, this is below 20, is at 2159. So for a few dollars, we are completing a wave 5 without worrying about breaking the rules for this diagonal. Okay. Now, I don't really like that as ABC here. And then you got another one, and then I don't like it, but it's the only solution I have. If you have another solution, of course, if you have another solution, please feel free to post it, because I'm interested in other solutions. Okay. Now, that said, okay, and you might say, well, you've got an ABC here, dude. Yes, well, that looks like an ABC for now. And if it's going to be an ABC indeed, because we have an actual chance for a flat pattern here, that can still go higher. Okay. If we're going to see a wave C here, that still means we're going to go higher. Yes. So it's like I have two things that contradict in here, right? I've got an A that finished. That means if we get an ABC, it's going to have to be an ABC for the larger wave B over here, right? And then you might ask, well, how extended is that going to be? If this is A and B and C, what we're going to do 400, 236? I mean, we could, yes, but like structurally speaking, the amplitude and magnitude of wave A and B, that don't seem like this belongs to the wave B. And that is the reason, right, I've got it as an ABC in minor, which means what? Well, look, we are waiting for intermediate, right? So W, X, and Y. So that is what is missing here. Okay, intermediate. So I'm expecting to see this turning into a W, X, and Y for a wave B. Okay. Now that means still, well, it depends. We can get a running flat, which I don't think is going to be the case. Probably an expanded flat here. Okay, in wave B. That though means I prefer that we go higher. I prefer we go up to around 26K, to be fair. You might ask why, because that's going to give us the chance to get an extended wave C. Because if we stop here and start falling, it's going to be most probably a regular flat. And a regular flat means we can go all the way down to 2331 and then continue to the upside. Or maybe it's going to be a W, X, and Y, right? Again. But what I'm saying is that if we do a typical flat, most probably there will be more chances that we'll continue up in 3, 4, and 5, and our wave A is not done yet. That gives us a wave A up to around 30K, which means, of course, it can extend wave C up to around 50 or so, right? Before we see anything else. So this is a bit tricky area, right? We'll have to expect to see, we'll have to wait to see what's going to happen. For now, there is no trade, obviously, as you can hear, or as you can see here, but there is more chances of a bearish leg right now rather than a bullish leg, as long as we remain below 26K, let's say. Okay, medium term. Short term, 26K, it's quite a likely case. But we have to see where this is going to go. Okay, right now If we stop here, more likely to get a regular flat, which means we can continue up and the wave A is not done. If we go above 26K and start falling impulsively, most probably going to go into W, X, and Y and go down for wave B. Okay. Now, are there other sort of things that can happen? Yes, there's so many things that can happen, but we cannot really explore everything. But I will show you something else. This is a short-term variation, okay, where wave A is finished here, yeah, and we have a larger flat that matches the intermediate wave leg, okay, much better than anything else. So that means that we could have finished here, or maybe we're gonna do wave B more, you know, because maybe wave B is done or not, and then we're gonna see a 5 wave leg move to the downside for, as you can understand, is already an well, either a running or expanded flat, but I'm leaning towards the expanding variation. Look, so you got an ABC coming down here, and you got another ABC coming up here. This wave B, it's an actual expanded flat. It's very big wave C, okay, but wave C's of expanded flats can do that. But the reason I do have that is that it explains that, and it doesn't break the rules again, because I'm gutted about how people call this a 5-wave move, because it's not. This is clearly a complex correction, okay? So, unless if I'm not seeing it and you got it, please tell me what it is. So, we come back to this. Is this a done case or have more upside? Is wave B done or 5 in one case or the other or not? Either case, this is the sort of short-term variation I have for you, okay? And that's for BTC. Now, jumping to FTM, I'm gonna go to the daily and we're gonna see something very interesting here, and you'd be like, wow, you believe the low is in. I'm not confident about the low being in, but I'm not giving you my opinion, I'm giving you analysis, and the analysis has to follow some rules, okay, first of all, and then some guidelines, and then you've got the process, okay? The process is every analyst's thing, and my process is based again on guidelines that if I believe that an actual correction has extended too much or has actually lasted for too long versus the previous correction of the same degree, then we need to respect that. That means this is 1 and wave 2, this is an actual flat, supposedly, right? And then you got the 3, and then you got the 4. And these two corrections match, okay, because this is deep and this is shallow. This is a flat and this is an ABC. So the guidelines of alternation are matching with that particular outlook. And here we go, we have 1 and 2 and 3 and 4. Perfect on the base channel and on the acceleration breaking outside the base channel. So we got to see wave 1 or A, B or 2, and 3 or C, and then 4 or 1, and either 2 and further downside for 3, or 3 and then 4 and 5 for 5, and from there, of course, you know what that means. Now, is the low in? Do I think the low is in? I don't think the low is in, but I'm giving you analysis, I repeat, okay? We cannot ignore the fact that this is an extended wave to 2618 and an accelerated wave 3, okay? Accelerations can be in 1 or A, but when we have such an acceleration, it's most probably a third of a 1. That is also something I need to mention to you, because I'm not here to, you know, drive you into one sort of idea or the other, okay? We're here to analyze. Now, if that's the case, where can wave 5 end? Well, I think I need to add the 3 here. Look at this. We could see that to the 79, but we always prefer when we have 1, 2, 3, and 4 in to use the net distance through waves. And that is going from 0 to 3 down to 4. And look for 38, 61.8, even the 100. But let's not forget, both things could work. Look at this. One is extended, one is not. And I think TradingView has this wrong. 90 comes up. 80 comes up, 72 comes up. Always look at both things to make assessments, guys. Find the levels. And since we're talking about finding levels, look at this. Do we see something interesting? Look at this, 50 and 79. So that might be where our fifth wave ends, which means I see more upside in the short term. That doesn't necessarily mean, of course, that we're going to go up, guys. Let's not forget, okay? I personally don't like to trade fifth waves because, well, because there is only little room. And especially look at this now. Where are we? What is your risk to reward ratio? Look, let's just take this reasonably, right? Look, let's do a long position at the bottom. What is your maximum up to that level? And where's your stop loss? It's got to be below that low. Look at this, 130. Is that a good trade? I don't think so. Okay, then, you know, the chances here, because we have done around 80%, is for a triangle more than we have a deeper ABC or something, right? That is also true. Because if we did do a deeper ABC, that means that we have to fall very fast and very quickly so that we respect the guidelines. We're not talking about rules right now because it's different to get ABC because that looks better than compared to this, and different to get an A, B, and C because that is going to be like twice the duration of the wave 2, right? So for this structure now looks perfect, guys, for a wave 4. Look, we got like a 79% correction in one case, so we need to get around 20% to 38% on the other, and that's the third wave. There you go, 38. Okay, and maybe this is going to be the case for 20. Why? Because A, B, C, D, E brings us closer to 20, and what matters is where the wave ends. If it's going to be a triangle, your wave ends at the E wave, not at wave A. We might get, you know, something else, who knows, but we have to also be honest that that kind of looks like a 5-wave leg, guys. So I think like we might be due another leg to the downside before we see more upside. So in the short term, I would prefer to actually stay clear of FTM. Okay, what is the best thing to do is wait for a deep correction, because the best ways to trade are the beginnings of the third. Okay, and that means actually going down to 32, 33. If we go down to 33, that is a buy for me. Okay, 33 means we are going to buy, and well, I don't like to say that we're going to buy. We could consider the 50 as a potential entry for a medium-term trade. Okay, statistically speaking, the 50% break-in means that there is more likelihood that sentiment changes and will go lower down. So ensure that you have your stop losses and you manage risk properly. Now, if we go up from here and start falling, that's going to be easier to assess an entry because we can move our Fibonacci there and look for the 50 again, or perhaps even, who knows, other different levels. Others can do a bit of split. You know, you can, for example, start entering at 23, then lower 38, 50, 61.8. But that is one trade. If you want to put 1K, for example, break it down to 250s, 4 trades, you know, split. But anyway, what I'm saying is that I think medium term will have a better trade than we do have in the short term. We prefer to trade wave 2 or B rather than anything else. Okay, now let me show you an alternative which I think might be actually what I'm expecting. And there we go. The same exactly thing. We are in wave 4, which means wave 4 is not finished, right? And we are assuming, of course, that, you know, wave 4 is going to be a bit more, is going to last a bit longer than wave 2, which is very possible, right? These things happen all the time. I mean, it can be triple the duration or even more. So you've got 1 and 2, and then 1, 2, 3, 4, and 5 for 3. Instead of a triangle, we've got an actual running flat, which matches again because you've got a shallow correction sideways and a deep correction ABC. You know, it's matching perfectly for a wave 5. And then you got the 5th wave down here. And then instead of we're still going to see the same thing. We're going to see wave B instead of 2, and we're going to see wave C instead of 3, which means the upside it's restricted. and we're going to get a restricted upside. Means that we don't want to go above 79. You might say, well, what at 54 and we're going 190 and then all the way down? No, that's not what I'm saying, guys. Actually, what I think is going to happen, I would prefer to happen as well, is maybe we're going to go up now. We see a deep wave B, and then we get the 62, and then one more leg to the downside, and from there we'll continue up. Now, can something else happen? Yes. Is it premature to give that over the other? It's actually no, because we expect exactly the same outcome for the medium term, okay? And what changes is that when we complete that wave B and we start moving up, then things start to get a bit more interesting, because the probabilities are gonna start moving around what's gonna happen in wave either 3 or C. Okay, so I hope that helps, and I hope you enjoyed the video. I would say I'm not gonna do that for a long time and always go like half an hour, but what can I do? If you don't like it, you can just watch. You can just use the timestamps I leave on the caption and take it for that. But all of this video is purely educational, so you should watch it because there is a lot of learning to extract from these videos. Thanks again for being here. Leave a like if you like the video, and let's not forget Discord. It's the link is just under in the caption. Feel free to join. There is 2 versions. Well, based on what you want to do, you can join either.